Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the 4-hour time frame, where we're going to attempt to count the price action here since 49k as an impulse, diagonal, or a double 1-2. Now this is an interesting approach that I can recommend to anyone because it is a lot easier to try and count an impulsive structure compared to trying to count corrective structures. So especially if you're in the beginning of your journey, try to count an impulse, diagonal, or a double 1-2, and if you can't, the probabilities are higher. You're looking at a corrective structure, meaning probabilities are higher for price to take out the low, even without you needing to know what the corrective structure is. So let's start with an impulse. An impulse is a 5-wave structure, 1, 2, 3, 4, 5. That would have been an ideal scenario, actually something like we had over here, right? A very clear 1, 2, 1, 2, 3, 4, 5, 4, 5, and then have a retracement, a continuation. Now in this case, this was a wave C, so we took the low again. But in this example, from 49k towards the upside, that would have been ideal. We cannot, however, count an impulse to the upside here, count it as a 1, 2, 3, 4, 5, because wave 4 has overlap with wave 1, which is not allowed in an impulsive structure. There is a very slim chance to count this as a 1, 2, 3, this is your 4, and then a wave 5, to count this as then a wave 1 for a bullish scenario. But then all of this price action here needs to be a wave 2. And this leads to a problem, because if we then use the trend-based fib time taken from the low to the high of wave 1 and you double click here, then you can see that your wave 2 is 8 times longer in time compared to your wave 1, which is incredibly rare. The common target for your wave 2 is between the 3A2 fib time and like a 2 or maybe 3 fib time, but not an 8 fib time. So the probabilities are low to count an impulse since 49k. This then leaves us with a diagonal. Now initially we had the potential of a 1, 2, 3, 4, 5, but price took the low, invalidates a diagonal of that size, which means that the only diagonal that is left would be a wave 1, 2, 3, 4, 5. After wave 5 of this diagonal, you are then looking for a preferably deep corrective structure after a diagonal before then continuation to the upside. In this case, you're going to continue this range for a little bit longer, probably a couple of months. Now the problem for this diagonal is that it is way too early to call probabilities for a diagonal. Preferably you wait for a wave 4 to be in before really starting to give higher probabilities to a diagonal. And at the moment, we would be looking for a wave 3 to form, then eventually 4, and then of course a final leg up in a wave 5. So wave 2, yeah, maybe wave 2 is finished. We're looking for a 3, but you know, we haven't even really started a 3, right? We're not even close to ending a wave 4. So we can't give the highest probabilities to a diagonal this early in the stage of forming a diagonal, right? So it's a scenario we can keep in mind, but we cannot give a diagonal the highest probability. This then leaves us with a double 1-2. A double 1-2 preferably was counted as a 1-2, 1-2 up, but price took the low, invalidating a double 1-2, and the only double 1-2 that is then left would be 1-2, 1-2, but as explained, your 2 is very long. So therefore, these three over here, these three bullish scenarios, an impulse, a diagonal, or a double 1-2, since the 49k low here, have low probabilities. An impulse doesn't work, wave 2 is incredibly long compared to 1, a double 1-2 is invalidated, and a diagonal is too early. Your only alternative that is left outside of these three is that the price action here is indeed corrective, part of a triangle where you then range sideways in a bigger 3-wave W, X, and then you have a wave Y. In this case, you then have a wave A, B, C, D, E. However, a triangle in a wave Y is the rarest structure. Most common is a zigzag or a flat. And also here, if we look for a triangle, then preferably you wait for wave D to be in to confirm wave D as a 3-wave structure. So we want price to move to the downside here. And only then can we start to really give probabilities to a triangle in the wave Y. It is good to keep it in mind, but it's difficult to give it the highest probability. So therefore, any of the bullish scenarios at the moment here locally, which includes that triangle that I've just shown, because you're not going to take the low here with that triangle, it is not easy to give the highest probabilities to the bull. So in other words, right, based on the analysis, the probabilities are higher for the bears. Even if you do get a movement towards the upside, initially the probabilities remain higher that that structure to the upside is part of a bearish corrective structure for price to take out this low sooner or later. And of course, on the lower time frames, we can be a lot more precise and identifying what kind of structures we are looking for exactly. Now, the most bearish structure on a 1-hour time frame is that you have a finished 3-wave move to the upside, and now you look for a multi 1-2 to the downside. Now, what you're basically looking for here is a very big impulse. You have a wave 1, a 2, and then eventually you have a wave 3, 4, 5 in red. Red is the highest degree count. Inside the red wave 3, we look for the orange wave 1, a 2, and then a 3, 4, 5. That's a sub-degree of the red wave 3. And then inside the orange 3, we have the yellow count, 1, 2, and then 3, 4, 5. Now in this case, you can see that the red wave 2 and the orange wave 2 both have a labeling of a WXY. So a sideways, a double combo, a WXY, where we have a zigzag, complex structure, flat, zigzag, complex structure, and then eventually a flat for your wave Y. Now, what is interesting is that in a wave 2, if you do have a multi 1-2, then preferably your wave 2s have the same structure, same corrective structure, which is a possibility here. So therefore, this scenario is one to keep in mind. Now, that means that if we are looking for another 1-2, we want to see strong signs of weakness and a very impulsive wave 3 to the downside to much lower prices, easily taking out 49K. Very likely directly moving to 45 or even 42K. The invalidation for this scenario, arguably your most important level on the chart, is 57K. Hit 57K and the probabilities increase for price to get a bigger retracement to the upside to look for resistances higher. The common target for your yellow wave 2 is between the 618 and the 786. You can see we have hit it here. We also had some additional resistance here, the blue box, as you can see. So we're testing that blue box. Nice, right? And if price hits the 886 at 56.5K, the probabilities will significantly decrease for this scenario. Finally, what you can also see is the vertical line on my chart here, which is a 1-to-1 fib time taken from the start to the end of the orange wave 2 to the end of yellow 1 to compare orange 2 in time with yellow 2 in time. Preferably in a multi 1-2, the lower degree wave 2s are a little bit shorter. So your first wave 2 here in red is quite long, your orange wave 2 is a bit shorter, and then your yellow wave 2 preferably is a little bit shorter as well. It's not an invalidation, it's just, playing around with probabilities. So it actually would be nice for the yellow wave 2 to have this as a high and then move towards the downside. But that means you need to see significant weakness, and we will still cover the 15-minute time frame as well. So by all means, price needs to take out this high to at least give the bulls a little bit of a chance. Your bullish scenario is a finished 3-wave structure to the downside in a WXY. WX inside X, we again have a WXY, and then we look for a wave A, WXY and B, C. Common target for wave Y is the 1-to-1 trend-based fib extension taken from the start to the end of W to the end of X, which is hit very nicely and respected. For wave C inside wave Y, because we look for a double zigzag here, so we have an ABC inside wave Y. Common target for C is the 1-to-1, also hit, right? So also this scenario works, which means that on the 1-hour time frame, the probabilities arguably depend on a 15-minute time frame and price taking out 57k, yes or no, right? Also changing market structure here, taking out this low, of course, would also slowly increase probabilities to take out this low, which in turn increases probabilities to take 49k, etc. But this is your bullish scenario. Finish WXY, and then you're looking for price to move towards the upside. Now, if I then go to the 15-minute time frame, I can definitely recommend you to check out the live stream I did on Saturday. So that is 2 days ago, where I was analyzing the price action that we had on Friday and on Saturday since the low basically. And I eventually put this squiggly line on my chart with a reason. So in that analysis, you can see me pull a couple of volume profiles, looking for some resistance and support. There's a speed fan here on my chart, taken from the low to the high, as well as the point of control. And what I was looking for in that particular analysis was for price to touch the value area highs and then move towards the downside. You can see the squiggly line, nothing changed from the analysis I've done on Saturday, so make sure to check it out. Now we did over here hit the point of control first, which arguably was your most interesting support to the downside. We then moved up, hit the resistance, but actually never broke through. Instead, we started to move to the downside with some very local bearish CVD divergences, and then ups, white box touched, value area high touched, and now we move towards the upside taking the high. So very, very nice, right? Now from an Elliott wave point of view, if we look at this being a corrective structure, we want to count this as an ABC or a WXY, double zigzag structure, right? We have a solid 3-wave move to the downside. It is confirmed a 3-wave corrective structure because price took out the high. You can see the 1-to-1 is nicely respected, taken from the start to the end over here, from the high to the low to the high. So everything works. But your most common target for a wave C, as well as for a wave Y in a double zigzag, would be the 1 to the 1.236, which is a little bit higher. And we haven't touched the 1-to-1 clearly because we didn't touch 55.9k. Of course, your bullish alternative is counting this as a wave 1, 2, possibly another 1, 2, but then a wave 3 towards the upside, looking for those higher prices, taking out 57k. Again, 57k is a very important level on the chart. So when we look at the 50-minute time frame, preferably your high is not yet in. Based on probabilities, knowing that the 1 to the 1.236 is your common target area for a wave C as well as a Y, right? You preferably look for at least that area to be hit, which we haven't yet. So therefore the probabilities on the 50-minute would be higher for price to still take out the high. And we can't actually really look for other corrective structures. A triangle, for example, A, B, C, D, E, wave C took the high of A, invalidated, right? That is not allowed. Counting this as a first structure and then a wave A, B, C, D, E is still an option, but then you still expect price to take out the high later because you're going to be looking for an A, triangle B, and then a C, or a W, triangle X, and then a wave Y. In a sideways WXY, W zigzag X, you want a flat in a wave Y or a triangle in a wave Y. Well, a triangle is too early to call, A, B, C, D, E, right? But a flat structure, A, B, C, you still take out the high most likely. So based on the 50-minute analysis, preferably, we still take out that high. Now, when we look at the local support resistance levels, if I turn everything on, then you can see that to the downside, we have this daily naked point of control here at 54,450. Interesting area of support, in confluence with, of course, the range that we have over here. And to the upside, we have this daily naked point of control. We just missed out on hitting it. Above that, we have a weekly naked point of control at 56,550. And if I do keep the daily on, then you can see I also here have 2 dailies. Now, I like to make target boxes. Those are areas of confluence. I had a box over here, which we hit. We moved to the upside, right? Arguably hit the box here as well. But to the upside, the weekly, naked point of control daily, and this daily are not labeled as a box, but I do keep them in mind, but they don't really have a great amount of confluence. And then we have here the daily naked point of control back at 60k, right? So that's again a nicer area of interest, but keep in mind the levels in between, trading level to level as well. If we then look at the CVD divergences, then we had the bullish CVD divergences here on the chart playing out. Higher low in price, lower low on the CVD. Price taking out this high CVD divergence played out. And now locally, we can see some bullish CVDs here. But if you can look at that, or look at the chart here, you can see that we didn't only have bullish CVDs, we had some bearish CVDs here, which played out as price moved to the downside. You can see all those checkboxes in the middle of the dotted lines, which means that pretty much every CVD divergence we had on a 50-minute time frame over the weekend played out. It's such an awesome tool. It is so good. Check out the first link in the description. It's absolutely free. So then over here, bearish CVDs locally played out. This small little bull one, okay, one invalidated. And then we had a bearish CVD here, which also already played out. But you can now see locally, we still have some bullish CVD divergences locally as well, which therefore could support the narrative of price still taking out this high on a 15-minute time frame. Of course, we do have this daily naked point of control just below, which is interesting support to the downside. So if we then finally look at the probabilities of the different scenarios, then on a 4-hour time frame, the probabilities at the moment are higher for the bears till proven otherwise, right? We have analyzed this structure on a 4-hour time frame, impulse, diagonal, double 1, 2, even the triangle. But as shown, one can't give the highest probabilities to an impulse, a diagonal, a multi 1, 2, or a triangle. On the 1-hour time frame, the probabilities at the moment are neutral, right? Good to wait for a bit more price action, and if price does take out a 57k, the probabilities increase for further upside. Arguably as well, if price takes out 53.6k, this low here, the probabilities increase for price to move down. On a 15-minute time frame, the probabilities at the moment from an Elliott wave point of view are higher to take out the local high, because price did not hit the common corrective target for a wave C or a wave Y, only the rare target, which is the 0.618 trend-based fib extension, which is again a rare target, one you don't see hit very often for price to reverse at that particular level. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.